Welcome, folks. This is the market review for Nas100, and also I'll be sharing with you how to determine the short-term bias. So as you can see, this is today's price action right here. So you had this inefficiency that we traded into during the London Open. So we had that run into this inefficiency. So as always, time becomes the number one thing that we look. So we had that and into that, we traded into that, we ended into that, and we had these relative equal lows, and eventually we had these lows. So when you head over to the daily chart, show you something on the daily chart. So on the daily chart, we had this inefficiency that would have been the draw on liquidity. Also, we had these is an inversion fair value gap. So price went through it. Now it's coming back to it. So it could act as support, and then maybe trade into this. So this would have been the draw on liquidity. So we had that being the draw, and also this low, which was yesterday's low, and also this low. So let's get back to the 15-minute chart. So this was right into the London Open kill zone. So we had that. Also we had a clear sell side that was residing below these lows right here. We had this inefficiency. So that would be the very short-term bias, the next draw on liquidity. So we had that, and you can see we swept that low, even went into that inversion fair value gap, and then we reversed to the upside, taking out that high. So this is the New York Open kill zone, as you can see at 9:30 when the indices markets open. So we have that run taking out and clearing those highs. Now we are trading to the downside. So if we head over to the 1-minute chart, see how so here's the 1-minute chart. So price meandered around this area. So as you can see, we had that run to the upside, taking out these highs, and then we had a shift to the downside. So we could have entered using this inefficiency right there, and then placing a stop right above this high. And also you could have gone short this fair value gap right there. So as price was trading down, we had these candles that were coming to the upside, as you can see. So this would have been your entry, and your stop be placed right above that. So entry short right into that the inversion fair value gap, placing your stop right above that high, and then aiming for this low, and eventually we had yesterday's low right here. So that would have been the drawn liquidity. So that is a very short-term bias. So you have 11.45 hour trade. So that's it for a short-term bias. It's basically so simple. You look at where price is and at what time, and then you frame some entries based on your entry models. If it is the 2022 mentorship entry model, you can use that. If it is the optimum trade entry drill, you can use that. Also, you can use any entry model that you feel like it's good for you to use. So it's quite simple. We had this is we call it the manipulation, and then here we have the distribution. So we had this beautiful run to the downside, and we traded into the inefficiency, the inversion fair value gap. So we had that. So that's it for the daily the short-term bias. You don't necessarily need the daily bias. You just need a short-term bias. Aim for the lows or the highs or inefficiencies, and that's all you need. So until I talk to you next time, be safe.